Financial markets are eagerly anticipating a press conference which will be held in Beijing tomorrow, which could result in more stimulus being provided to China's economy. Now, if that happens, then it will cause global markets to surge on Monday and improve the outlook for Australia's economy. Michael McCarthy is a market strategist at Moomoo, and I spoke to him a little earlier.
Well, there's a huge range of forecasts about what might be said by the Minister of Finance tomorrow. The reality is we're expecting fiscal stimulus, and the question the markets are asking is how much. Now, some have estimated as low as a 1 trillion yuan announcement tomorrow, some as high as 6 trillion. So you can see this huge range means that no matter what the number that is announced tomorrow, even if there is a number, somebody will be disappointed in the markets.
Well, the market was pretty pumped up at the start of the week because China was meant to announce a big stimulus on Monday or Tuesday afternoon, and that didn't really happen, did it?
It did not. On Tuesday, there was disappointment in the markets, and perhaps expectations had run ahead of realities. The huge package delivered by the People's Bank of China on the 24th of September meant expectations were very high. But one of the problems here was that markets had also run enormously. For example, the Hang Seng Index, directly related to China, of course, was up 33% in a space of 2 weeks.
Crazy.
And perhaps Chinese authorities got a bit concerned that the markets had reacted too far, too fast.
Say there is a big stimulus announced tomorrow and it's for the infrastructure sector. What impact might that have on the Aussie economy and our market?
I think we'd have an explosive day's trading on Monday. There's no doubt that a big package tomorrow will bring a market reaction, not just here in Australia, but around the globe, because extra growth in the Chinese economy, one of the most important in the world, is good news for every economy. So clearly it would have real implications for Australia. I would expect the Australian share market to outperform next week if we do see a strong package from China tomorrow. And of course, Chinese markets, which are nearer lows than highs in contrast to the rest of the world, are also likely to be major beneficiaries.
Yeah, let's look at the Aussie market. You mentioned we're close to a record highs here in Australia right now, aren't we? What's been one of the big things that's been driving our market for the past 12 months?
Well, we've had a bit of a sweet spot here in Australia. We've had reasonable growth and reasonable inflation. And while that's tied the Reserve Bank's hands, it has meant the economy has ticked over. So we are seeing profit growth as well. And all of that translates to a healthy share market. We've also had some good performance from sectors. Tech sectors more recently have been running. But we also saw the banks join the party in August and put together a good run. Now we're seeing resource stocks running on the back of the China growth story. So there's been a lot of strands to this getting to record highs for the Australian share market. The key question now, of course, can we hold it there?
Yeah, the bank share prices have been crazy, but I just wanted to talk to you about a big deal that was announced this week because there hasn't been that many big corporate deals this year, but Rio Tinto buying Arcadium Lithium, or at least agreeing to buy it. This is a massive takeover, right?
$8 billion is not small change in anyone's language. And it's a very interesting move. Lithium markets have been terrible all year, and a lot of local investors have been badly burnt as those weak lithium prices have translated to weak mining prices. So it's been a turnaround situation here. We did see the largest producer of EV batteries in China shut its lithium mine, and that might have been one of the factors that spurred Rio to act here. We might be looking at the bottom of the lithium market and a turnaround. Rio have proven themselves to be ahead of the commodity cycle again and again. Only time will tell if they're ahead of the game once more with this lithium bid.
Yeah, this seems like a bit of a risky bid looking at Rio because lithium price, it is down about 80% in the past 12 months and doesn't look like it's going to recover anytime soon. But I guess they've got a really long-term way of looking at investments, don't they?
Yeah, some would say risky, some will say gutsy. And the reality is they're being true to label. They are global miners and they're in the risk business. And their job is forecasting the commodity cycle. So whether you agree with them or not, I would argue that the Rio management are doing their job.
Now, this week, just overnight, US inflation figures came out. Was that a bit of a disappointment to investors and potential for further rate cuts from the US Federal Reserve?
Oh, it certainly was. We saw interest rate markets back away immediately after the release of the inflation data. And that core reading for the year at 3.3% is what they're concerned about. We know that's the measure that the Fed looks at. We know that's above their target zone of 2 to 3%. So this really makes it harder for them to cut rates in the near future. And given that markets are expecting 2 rate cuts by February, we've seen a big backing away. A stronger US dollar as a result. Interestingly, equity markets haven't really reacted yet, and we might see delayed reaction in trading in the US tonight.
It's interesting as well because the next Fed decision is exactly the same week as the US presidential election. So I don't know if that's going to play any role with Jerome Powell with his thinking of whether he needs to cut rates or not, but it is interesting timing.
Oh, it is absolutely interesting. I mean, it's almost as interesting as the next RBA meeting being on Melbourne Cup Day. But the point being, I guess in both cases, they would say that those exogenous, they are outside events that don't affect their thinking when it comes to inflation and interest rates.
The other big thing coming up in America is the earnings season. It's just kicked off late last week. What are you expecting from that tech sector? Because that's been one of the things that's pushed US markets to record highs this year. Well,
they have been top performers this year, both in terms of delivering growth and delivering share price appreciation. So they're very popular with investors. Unfortunately, they might this time around be victims of their own success because growth expectations have remained very frothy. And if they don't deliver on it, the risks are that we will see significant adjustments in their share prices almost immediately. So it could be a choppy earnings season, and without those macro factors and the Fed put under the market, we might see some investors rotating on the back of this earnings season. There's also been a lot of frothy expectations around US consumers, and this profit reporting season will find out whether or not they're fair expectations.
We don't have much time left, but the Aussie retail sector, do you think it's improved since the tax cuts have started flowing through to the economy?
That pressure on prices that we've seen in recent inflation readings suggests that that is the case. It's coming through. Let's remember too that 66% of the Australian economy is services these days, so we might see in future CPI numbers coming back into restaurants, for example, or other personal services. It does look like, though, the Australian consumer at the moment is in a conservative mindset, and we might need to get a few events out of the way first, like a federal election, before confidence returns.
Michael McCarthy, great to have you on the show.
Thanks very much.